Sources of cash. A firm's activities that generate cash. Uses of cash. A firm's activities in which cash is spent. Statement of cash flows. A firm's financial statement that summarizes its sources and uses of cash over a specified period. Common size statement. A standardized financial statement presenting all items in percentage terms. Common base year statement. A standardized financial statement presenting all items relative to a certain base year amount. Financial ratios. Relationships determined from a firm's financial information and used for comparison purposes. Current ratio. Current assets, current liabilities. Quick ratio. Current liabilities. Cash ratio. Cash, current liabilities. Net working capital to total assets. Net working capital to total assets. Interval measure. Current assets, average daily operating costs. Total debt ratio. Total assets. Debt equity ratio. Interest. Equity multiplier. Total assets, total equity. Long-term debt ratio. Long-term debt. Times interest earned ratio. EBIT, interest. Cash coverage ratio. Interest. Inventory turnover ratio. Cost of goods sold, inventory. Days sales in inventory. 365 days, inventory ratio. Receivable turnover ratio. Sales, accounts receivable. Days sales and receivables. 365 days, receivables turnover. NWC turnover ratio. Sales, NWC. Fixed asset turnover ratio. Sales, net fixed assets. Total asset turnover ratio. Sales, total assets. Profit margin. Net income, sales. Returns on assets. Net income, total assets. Return on equity. Net income, total equity. Earnings per share. Net income, shares outstanding. Price-earnings ratio. Price per share, earnings per share. Price-sales ratio. Price per share, sales per share. Market-to-book ratio. Market value per share, book value per share. Pont Identity. Popular expression breaking ROE into three parts: operating efficiency, asset use efficiency, and financial leverage. Standard Industrial Classification Code. A U.S. government code used to classify a firm by its type of business operations. Two main functions of a firm: generate cash, spend cash. Cash flow from assets equals cash flow to creditors plus cash flow to owners. 5 categories of financial ratios: short-term solvency, liquidity ratios; long-term solvency, liquidity ratios; asset management, turnover ratios; profitability ratios; market value ratios. Another name for liquidity ratios. Liquidity measures. Goal of a liquidity ratio: to analyze a firm's ability to pay its bills over the short run without undue stress. Burn rate. The rate at which cash is burned in the race to become profitable. Another name for long-term solvency ratios. Financial leverage ratios. Another name for the times interest earned ratio. Interest coverage ratio. Meaning of EBIT. Earnings before interest, taxes, and depreciation. Meaning of EBITDA. Earnings before interest, taxes, depreciation, and amortization. Amortization. A non-cash deduction conceptually similar to depreciation, except that it applies to intangible assets. Asset utilization ratios. Analyze the efficiency with which a company uses its assets. The higher the inventory turnover ratio is, the more efficiently we are managing our inventory. Another name for days sales and receivables. Average collection period. Definition of return on assets. A measure of profit per dollar of assets. Definition of return on equity. A measure of how the stockholders fared during the year. Another name for return on equity. Return on net worth. P/E ratios measure how much investors are willing to pay per dollar of current earnings. Tobin's Q ratio equals market value of firm's assets, replacement costs of firm's assets. Another equation for ρ equals ρ or XM. Sales equation for ρ equals profit margin x total asset turnover ratio x equity multiplier. Three things that affect ρ: operating efficiency, asset use efficiency, financial leverage. Internal uses of financial statements. Performance evaluation, planning for the future. External uses of financial statements. Evaluate suppliers' future existence of the company, assessing the firm's creditworthiness, competing efficiently against other firms. Aspirant Group. The group of companies our company aspires to be like. Basic problem with financial statements analysis. There is no underlying theory to help us identify which quantities to look at and to guide us in establishing benchmarks.